All right. Well, good evening, everybody. Good evening. My name is Chris Price. I am the host of the Wealth Mindset and Real Estate Investing Meetup, and I want to thank you guys. This is our last virtual meetup of the year, with our guest speaker, I should say, for the year and until the new year, and we are ending it with our guest speaker series with a bang. And so I'm super excited about our guest speaker tonight. But as I mentioned, my name is Chris Price. I'm the host of the Wealth Mindset and Real Estate Investing Meetup, and I'm also the CEO and co-founder of Red Fox Multifamily. Our guest speaker this evening is Mr. Justin Moy, and he's going to talk to us about 6 steps to 6 figures in passive income. And I think you guys are going to be in for a treat. I'll get into a little bit more of Justin's bio in just a little bit of time. But before I do that, let me actually give a little bit of a commercial break here with our sponsors. And so, Wealth Mindset and Real Estate Investing, the meetup that you are a part of here. This meetup is focused on wealth mindset and real estate investing, and it's open to all who are interested in growing generational wealth through passive real estate investing and increasing their financial intelligence. This meetup is for the busy professionals and retirees across various industries. The individuals in the group make a good living and have discretionary income to invest in real estate for its proven wealth building power, but they don't necessarily have the time, skill set, or network to do it at speed and at scale. This meetup focuses on helping us all grow our wealth mindset by learning how to build and preserve wealth while developing and maintaining an abundance mindset. This meetup will focus on multifamily real estate investing as well as other proven ways to build wealth through real estate passive investments. And we're sponsored by Red Fox Multifamily. Now, Red Fox Multifamily helps pharmaceutical and life science industry professionals diversify their portfolios, add passive income, and get all the perks of real estate investing without having to do any of the work themselves. Red Fox Multifamily partners with passive investors to buy commercial multifamily real estate based on vetted opportunities we get access to from our trusted network of top operators in the best markets throughout the country. Partnering with Red Fox Multifamily makes investing in real estate completely hands-off, allowing investors to add passive income, build equity, and save on taxes, all while being in an investment that is backed by a hard asset. So thank you guys for being here. Just a few logistics. I've muted your some of the lines, but if you haven't muted your lines, please go ahead and do so, just so we can keep down the background noise. Please, if you'd like, please hold your questions to the end. Of course, if our speaker invites you to ask questions throughout the presentation, please feel free to take yourself off of mute and do so. This presentation is being recorded, so please make note of that. If you also please note that this material that is being shared, neither mine nor the guest speakers, does not constitute an offer or solicitation to purchase securities. This is information only and should not be construed as business, financial, or legal advice. And as I always do, I like to connect with folks. We have over 1,000 members on our meetup, many of which I know will watch it on our YouTube channel once it's posted. And some of you, I've not had a chance to connect with you. In fact, many of you have not had a chance to connect with you. Please reach out to me, shoot me an email. Love to connect. If you want, scan the QR code, or if you'd like to reach me at chris@redfoxmultifamily.com. That's a great way to reach out to me. I'd love to just connect and have a conversation with you. So thank you in advance for that. So without further, I'm going to our agenda for tonight is we're going to do our speaker introduction. We'll have our speaker presentation, a little bit of Q&A, and then of course, if there's some time left over, we'll have a little bit of time for some virtual networking. But without further ado, let me introduce our guest speaker this evening. So our guest speaker, as I mentioned, is Justin Moy, and I have to say, Justin and I are a part of the same mastermind group, which is the Michael Blanc Dealmaker Mastermind, and it is very difficult to not notice someone like Justin, who is just out there making connections, doing great deals. But beyond that, what's most important, and I think you'll hear that tonight, his purpose, his calling, and being able to make an impact to sales professionals, other sales professionals, to help them diversify their portfolios and build passive income, is something that is just truly remarkable. And it is so amazing to be connected with him, for him to be on the platform and educating and sharing with all of us this evening. I'm really grateful for him for doing that. But he's going to talk to us tonight about unique pain points that sales professionals experience with investing and how they can address them, essentially. How commercial real estate is the vehicle that will help them replace their income with passive income. And this is typically within that 0 to 10 years if done correctly. And Justin will hit on a few of the points around the how about doing that. Justin is a successful sales professional who's turned innovative entrepreneur. So after he's excelled in various sales roles, he's realized that traditional investments didn't cater to the unique challenges faced by salespeople, the variable income, the economic uncertainties, and boy, are we in those right now. The job volatility, all of that stuff. And to address this, Justin ventured into commercial real estate investments, basically pioneering an approach that has enabled many sales professionals to replace their active income, that W-2 or that grind that you're on, replace that income with passive income from real estate investments, and offering financial security and a work-life balance, which is something that many people are pursue, but they just don't know how. And Justin's going to tell us a little bit of the secrets of how. And Justin is heading up President's Club Investors. So without further ado, let me turn it over to Justin Moy.
Awesome. Chris, man, what an introduction. Hope I live up to all that because you really got everything going there. But I'm excited to share my screen here in 1 minute and walk you through our formula, our 6 steps to 6 figures in passive income. And this is a formula that many of my peers have gone through. It's the path that I'm currently on, hopefully to achieve that 6 figures of passive income here in the next few years. So I'm going to share my screen with us and we're going to get things kicked off. All right, everybody sees this. Yes, all good. Perfect. So really excited about this presentation, something I've been working on for a long time and really presenting throughout the year. So I'd love to just dive right into it. Now, this is what we'll be going over today. So my confession is that the 6 steps to 6 figures in passive income, there's really actually 4 steps to 6 figures in passive income, but I added 2 bonus steps for both the naming aesthetics and also just add a few key points that a lot of people just don't consider when they start investing. So very standard disclaimer for most people who give presentations like these. Chris hit a lot of it on the head. These are informational only. Nothing here is considered tax advice. No solicitation to sell securities. And please consult your own personal accountant before making any investing decisions. So who am I? I know Chris ran through a lot of who I am. So you can go back to this recording and pause this if you'd like to read it more. But my big goal is to help people replace their income with passive income and live a more fulfilling and active lifestyle that they choose to live. It's why I wake up every single morning extremely energized. It's why I go to bed excited to do it all again the next day. Is to help people really realize that life that they truly want. And it typically doesn't involve working for 40 years and hoping that your money outlives you in the future. So here are the 6 steps that we'll be going over today. First is we need to find our magic number. That's our retirement number. Then for almost everyone, unless you've inherited a lot of cash or we have a lot of money on hand, we need to focus on multiplying our wealth. Now, one of my favorite quotes from one of my mentors is amateurs add and professionals multiply. So we need to find ways to multiply our money to make all of this possible in as soon of a time as we can. Then we convert that into cash flow, keeping that cash flow from our taxes legally, preventing our losses, and then always optimizing for the lifestyle that we want. So first thing we need to do is we need to know what our goal is and how we can get there. So if we want to accumulate $100,000 in passive income per year, we need to solve for a very simple math problem. Now, here's how that problem starts. what is the highest percentage of consistent cash flow return of an investment I can make that is shielded from market conditions, adjusts for inflation, and pays consistently monthly payments. Now, this is really important because we'll learn on some of the next steps about cash flow versus equity growth investments. But when you're ready to actually retire and replace your income, equity doesn't serve you typically as much as your cash flow does. So that's a really important piece of the investment strategy that shifts as you grow. But looking at the end, we need to find out what's the highest percentage of cash flow investments that I can consistently get that pays me out monthly. Now, the higher the percentage of cash flow we get, the lower the amount of total investable capital we need to have, and the faster you can retire. So the answer to that question right now is debt investments or triple net leases. So debt investments are using your money essentially as a loan. So think about you lending your money just like a bank lends money. People will pay you regular monthly interest payments. You're essentially taking the place of a bank. Triple net leases in the commercial real estate space are leases that put all the expenses on the tenant and are conventionally higher cash flowing investments with smaller equity growth potential. Now, today, these two strategies, you're likely seeing a conservative, somewhere between 9 and 12% cash flow paid out monthly and consistently. So that's the problem that we have to solve for. If we're getting 9% cash flow annually paid out monthly, that means we want $100,000, which is the amount of cash flow we'd want per year that's passive. We would divide it by the percentage of return that we're getting. So 100,000 divided by 0.09, which is 9%, gives us $1.11 million. So round that up to 1.2 million. So if you've invested $1.2 million into an investment like this, you would get anywhere from $108,000 to $144,000 per year in completely passive income paid out to you monthly. Now, that sounds really fantastic, but most of us don't have $1.2 million of investable cash right now. And that's okay because we're going to walk through the steps to get there. And that first step is to multiply your money. Now, where most people get investing wrong is they don't look to multiply their money to get them a reasonable amount of investable cash as soon as possible. So while there are cash flow investments that'll pay you between 9 and 12% per year, when you look at growth or equity investments, you should project closer to 17 to 25% returns annually. Now, the highest risk adjusted equity returns are on what's called value add commercial real estate right now. This means we buy something that's usually a bit run down, under rented, improve the operations, improve the cosmetics of the building, rent it out for higher amounts, and then sell it off for larger gains. Now, the reason why this strategy is the fastest wealth builder right now is because it has the highest multiples on your money. So I'll give you an example. In commercial real estate are priced off of income using something called a cap rate. Now, that cap rate tells you how much of a multiple you can use to price this property. A conservative cap rate right now for an apartment building would be about 7%, which in a growth market like a Phoenix or a Dallas is really unheard of. You'd be closer to 5%, but to be very conservative, let's say 7%. So if a property does $1 million in net income and sells at a 7% cap rate, you would take $1 million, divide that by 7%, 0.07, and get a valuation of $14.2 million. That means for every $1 of net income that you add to the property, you're getting $14 of additional equity gain on that property. A 6 cap would give you $16. A 5 cap gives you $20. So that right now is by far the highest multiples that investors have available to them. To give you a benchmark, one of my good friends and another mentor buys and sells businesses a lot. And if you were to sell a business or buy a business, a healthy business would get you about a 4x multiple on income. And in apartments, we're talking anywhere from 14 to 20 or even more. So when you're looking to invest in an asset with the highest multiples on your return, right now, there's really nothing like value add commercial real estate, where it's very, very feasible for you to start off with $50,000 or $100,000 invested in value add commercial real estate, and within just a few years have a very sizable amount to invest. Now, once you have that sizable amount where you're comfortable, you can convert your high equity gains into cash flowing investments. So debt investments, triple net leases, and some that I actually left out in the first slide because they're a little bit newer that they're gaining popularity are real estate anchored businesses. So things like car washes, assisted living facilities, Airbnb funds, all of these currently have some of the higher cash flows in the real estate markets. So when you're able to take that really large sum of equity and push it into these cash flowing deals, you get passive cash flow that can have really, really large impact on your life and your lifestyle. Now, what's really, really crucial is that you get steps 2 and 3 done in the right order. If you want to do this fast, if you want to replace that income as fast as you can. So unless you have, again, massive amounts of cash to start out with, you'll very likely need to multiply your money before you focus on cash flow. If you start out right away focusing on cash flow, even if you compound your investments annually, it still takes you about 3 times as long to hit the portfolio size of somebody who's investing in growth strategies. And so the reason I paste out here about every 5 years as a compound for growth strategies is that's a fairly realistic timeline for these, what we call value add deals. 3 to 5 years, maybe a little bit longer depending on the market. Deals right now are getting extended, but 5 years is a pretty healthy benchmark there. So while you can invest in cash flow right away, it'll just take you about 3 times as long to get the portfolio size that you're looking to achieve to stack up 6 figures of passive income per year. Now, all that is really fantastic, but we have to talk about your taxes. Taxes are a massive, massive expense for all Americans, and it's going to be one of your top considerations for investments. As again, another disclaimer, not tax advice, but what I'm going to talk about are just generally accepted practices. But by using strategies like depreciation and 1031 exchanges, you can defer and even in a lot of cases, eliminate your taxes with these and other tax strategies. The ultra wealthy really invest in real estate primarily for the appreciation and the depreciation, meaning your asset can go up in value. You can make a lot of money on them, but you can actually take taxable losses, meaning many real estate investors don't pay any taxes on those gains. And these are the exact strategies that Donald Trump uses and why he is a billionaire and has paid $0 in taxes in the years, and it's all completely legal. So these are a lot of the strategies that used to be really coveted just to highly advanced investors, but now are really known by a lot more people, retail investors as well. The average American pays roughly a third of their income in taxes, meaning that if you paid all your taxes in the beginning of the year, you'd have to work all the way till April just to pay the government. So one of the best things you could do for your financial well-being is to understand and take advantage of tax strategies that actually don't just help you, but they actually help the country. The government wants you to invest in these things. That's why their tax strategies are so friendly here. So real estate allows you to access tax strategies that help you reduce and eliminate your tax liability, which is another reason why I think they're the number one way to pull off retiring very early. So this is Dave Foster. He's a real estate tax expert. I had him on my podcast a little bit back, and his firm did a case study with their clients. They had 2 clients, one that uses depreciation and 1031 exchanges, and another that paid their taxes just as they go. They didn't use these strategies for whatever reason. Within just 4 investments, the difference in net worth was $7.8 billion. And these were just average investors. They weren't hedge funds, they weren't family offices, but the difference in wealth is so massive because you can use leverage and loans to buy real estate. So saving 20 to 35% in taxes and keeping that to reinvest and leveraging that with loans can equal massive, massive additional gains. So that's really the framework for creating 6 figures in passive income. It's not overly sexy. It's not extremely complicated. First thing you have to do is find your magic number when you can start to pull in $100,000 of passive cash flow per year. Right now, that number is about $1.2 million. Second, invest in strategies that multiply that investable cash that you do have until you hit that number. So again, if you're starting out with $50,000, $100,000, and you want to get to 1.2 million, you're looking at a lot of those growth and equity strategies. Third is invest in heavy cash flow products, private debt, triple net leases, real estate anchored businesses, assisted living facilities, car washes, Airbnbs, all have much juiced cash flows. And fourth, take advantage of the very strong tax benefits that real estate investing has to offer with depreciation and exchanges, which allow you to defer your taxes until you die or even eliminate them altogether with the right strategies. So now we have those four. Let's cover the fifth and sixth steps. We'll talk about some of these bonuses. So there are two big bonuses that I want to leave you guys with. First is you have to balance the game of risk and reward. Now, you can't take big wins without taking on some risk, but hitting 4 singles is much more likely than 1 home run. So balance out what you invest in. There's a few defensive metrics that we look at to balance out risk in our portfolios, but everybody's style is different. And here's the super secret bonus that most people unfortunately never understand. And that is by doing nothing with your money, you're actually taking a loss. And that's because of inflation. Now, inflation typically is around 2%, but it's been a lot more volatile since America got off the gold standard in the early 70s. Now, this chart shows stagnant money over the past few years. Now, I did make it a bit earlier in the year. So in 2023, it's showing 9% inflation, which I think is a little bit extreme. I think we'll probably end the year closer to about 5%. It's decreasing, but in the beginning of the year, we were pacing close to 9 still. So you can see the buying power of $100,000 sitting on the sidelines and not going to work for you over a 3-year period gets eroded to about $77,000 in purchasing power, meaning you'd have to invest in a product with 17.42% returns annually for 3 years just to make up for the losses that inflation's given you. There's no such thing as stagnant money. Your money is either gaining or it's losing, and it takes longer to make up for losses than it does to accept smaller gains. And the sixth is to optimize for lifestyle. Now, here's the last step in your investing journey. Remember that most people, unless you're playing the net worth game, which is totally fine, some people invest for that, but most people invest for freedom as the goal, and money is really just the tool. So when you're investing in things, make sure you invest in things that can thrive without you being present and without a commitment of your time. It becomes very difficult to grow a sizable portfolio if it requires your time, energy, or mental capacity to grow. And I actually had an opportunity to buy a very high cash flowing vending machine route local to me here in Kansas City, but I found out how involved the owner was in the route to make it profitable. And I just decided that it wasn't for me, because even though the numbers were fantastic, and you're talking 30, maybe 35% cash flow, I wouldn't be able to live the life that I want to live. I would have to be anchored to the investment, and that's something that doesn't fit my lifestyle. So remember that freedom is the goal, and you don't want to corner yourself with strategies that reduce that freedom later down the line. So if you want to take action on this, I'm going to send out, I'll send my URL in the chat for you guys, but go to my website. It's presidentsclubinvestors.com, and you will have access. The first thing you'll see is access to this Retire Within 10 bundle. It has this calculator in it, very intuitive. Enter some basic inputs about yourself, and it'll show you how long it'll take for you to invest and what certain amount you should invest for you to replace your income with passive income. So again, presidentsclubinvestors.com. Download this tool, very easy to use, and check that one out. If you want to get in touch with me, I am most active on LinkedIn. I am there every single day. Love the platform. Again, you can download the Retire Within 10 bundle on my website as well. Connect with me on LinkedIn. Here's my profile. I'm the only President's Club investor on LinkedIn, which is fantastic. Justin Moy should also do the trick for you. So thank you again. I appreciate you guys again spending your most precious resource, which is your time with me. So I'll open it up to any questions that anybody has, or we can just chit chat, talk about our experiences, or whatever's best.
Justin, great stuff, man. So, I mean, it was awesome. I love the calculator too. I remember, especially when I was in single family investing, I was looking for all the different calculators to do the
Yeah.
underwriting and then tell the story. But there are not too many tools out there for passive investors on commercial deals to be able to see,
Yeah.
okay, what does that look like for? So I love that tool.
Yeah, I appreciate that. Something that I think is really important because you got to have that North Star, right? And so if you're a guy like me, and sometimes I can get a little bit impatient, and I'm like, well, what's the journey look like? What's the process look like? And it's very simple. It's not overly complicated, but if you use this strategy, and Chris, I know you know this, you've walked this road a couple of times. It's very, very feasible. And once people realize how feasible it is, you almost get addicted to it, and you're like, well, I got to really dive in and learn more. And so hopefully that helps.
Absolutely. There's so much there's so much more that I wanna get to before we open it up to Q&A that we
Yeah.
ask all of our investors that we have on the show. But before I get to that, I do want to make sure that if there are any immediate questions that you guys have for Justin from his presentations, please take yourself off mute and ask them. If you prefer to do that, if you want to type them in the chat, please go ahead and do that.
And Joe's the brave soul with his camera on, so he's
Yeah,
right on my screen, taking up the whole thing. So I'm gonna pick on you, I guess.
yeah, I've always got questions. So you talked about kind of that value add approach, and building equity up first, and then
Yeah.
focusing on the cash flow later for being able to live on that passively. At what point do you focus on the cash flow? I understand that value add approach and building
Mhm.
equity in a property, selling it, having larger capital to go into another project and keep repeating this
Yeah.
process, multiplying, like you said. But when do you focus on kind of stabilizing into a portfolio of
Mhm.
investments that will cash flow and provide
Yeah.
that life for you?
Yeah, I think it depends on what you're looking to do. So for me, my goal is speed. I want that $100,000 of passive income as fast as humanly possible. So for me, I'm not really focusing on it until I have that larger pot of equity. Again, it's going to be a seven-figure amount. Now, for
Mhm.
some people, if they don't want that, that's totally fine. Some people prefer to balance their portfolios a little bit more. They'll put, 70-30 more growth versus cash flow, and they want some stuff coming in. And the thing with the value add approach is you typically will have cash flow. I don't invest in deals that don't have a certain amount of cash flow. If we buy it today, I want it to pay me tomorrow. It's a lighter amount of the return than the equity gain. So it's not like I'm putting my money away and I'm not going to see it for years. I'm still getting a distribution. I'm getting cash flow. That's just not where the main focus of the return is. I'm maybe getting, between 4 and 6%, but with most of the return coming on the back end. So just realize that too. I think that's an important part of it because some people, they want to feel it working as well. They
Mhm.
want to start getting those distributions. Maybe they don't want to do a ground up development that you're not going to see money for 3, 4, 5 years plus.
Mhm.
Or now, I mean, I don't know if you'll see that return now. I mean, construction people are getting hammered. But it's really a style thing. If your goal is speed, it's going to be more on the back burner rather than if you want to just diversify across a lot of different assets.
Mhm.
Yeah.
And once you do reach that seven-figure mark of equity, where do you go to turn that into the
Yeah.
six-figure of cash flow?
Yeah, so I'm still gonna lean towards being passive. So while you can buy stuff yourself, you want to lean into. I love hard money funds, so I'm still invested in hard money funds. It's just one of my earlier investments, and if I would have understood this stuff first, I wouldn't have done that one just yet.
Mhm.
But I love hard money funds where you can access lots of diversity quickly. They lend to home flippers, and that's been a very consistent, about between 9 and 10% annualized paid monthly triple net leases as well. So Chris, I know you've been in the Slack channels. We've
Oh
probably
yeah.
seen a handful of triple net lease deals come in, even as
Yep.
high as 14% cash
Oh yeah.
flow projections. So
Yep.
9 is pretty conservative, but I'm still looking there. Assisted living and Airbnbs, I think if you want to get a little bit fancier, those are really good. I'm in an
Mhm.
Airbnb fund and that thing is performing very, very well.
Mhm.
But those are going to be your safest, kind of more stable
Yeah.
bets.
I'll throw one more out there too. One of the things that very similar to you, Justin. Like we were very heavy into multifamily, and then as we started to become more sophisticated, we started looking at, okay, we're getting some cash flow in from through the distributions. That's all nice, but
Yeah.
not hitting our target of what we desired. So then how can we increase our cash flow? Through our research, in addition to all the things that you said, we also came across ATM funds. So
Yeah.
we invested in ATM funds, and ATM funds are heavy tax benefits through the
Yeah.
depreciation you mentioned and heavy cash flow. And
Yeah.
so that became a great asset for us to then bring some additional cash flow into the portfolio while the other business plans are being executed on the value add multifamily that will,
Yeah.
appreciate and sell off over time.
Yeah, I mean, ATM funds are massive. I haven't done them myself, but I hear, I mean, they could be up to 20% plus cash flow.
Yeah,
And, one thing to consider there too is ATMs are machines. So the reason why their cash flow is so heavy is because they have true depreciation, right? Chris, I don't know if that's been your experience, but
that's
the
right.
tax benefits are massive because they actually depreciate. In real estate, you can take depreciation, but your assets actually gaining in ATM funds, they're computers. So there's something to consider too. You can definitely bat higher cash flows. And if you really want, 20% is not unreasonable for like an ATM fund.
Very true. Sorry, Joey, I interrupted you.
You're okay. And when you guys mentioned like ATM funds, hard money funds, you guys are talking about as limited partners yourselves.
Yeah.
Correct.
Yeah. So to me, optimize for lifestyle. I mean, I don't want to manage all this stuff or look at deals and underwrite deals and place my capital. Find some partners you really, really like so you can, be on the beach somewhere. That's the goal.
Interesting. So focus on building that equity up. So you can put that equity into somebody else's fund and let them build their equity and repeat the process.
Yeah. I think that's the way to do it. And these are things that I wish I knew earlier on. Like I said, I'm in some of these hard money funds, and they're great. It's just not going to get me to my goal as fast as I'm looking to. But the returns are stable. The operators are great. And it's a good strategy.
Interesting. Thank you.
Of course.
What other questions do you have? Anyone? Joe, Victoria, any questions?
I think I'm all right now. I'll definitely try and think of some more.
No sweat. Then what
Yeah.
I'll do next is I'll segue into the questions that I have for Justin as well. But before I do that, I want to make sure, Justin, you hit on so many great things that I wanted to, I was taking notes throughout the presentation, and one of the things that you talked about, especially around the inflation aspect of things, many people, many unsavvy or non-savvy investors or just late people, they work so hard, but they don't understand
Yeah.
the negative impacts of inflation on their money. I'm not going to do anything. I'm just going to keep it in my savings account. And they think that that's safe, but little do they know that they're being robbed by that stealthy thief
Yeah.
of inflation. Maybe you could talk a little bit more about that to really help drive that point home, because I can't stress the importance enough.
Yeah. If the next 30 years treats us like the last 30 years from an inflation perspective, the value of money will get cut in half. So inflation is the greatest wealth killer that exists in our country. I mean, you look back, into the 70s, the 60s, the 50s, you had people who were grocery store clerks, and they could raise families on that, and you could buy the house, and you could take a vacation, and you can raise 2.5 kids, and that's really unheard of in today's day and age. If you have any kids who are graduating college or that age and they're entering the workforce, it's impossible. You can't even live in the cities that you work in nowadays. So inflation is a massive killer of wealth. It's a silent killer, and it's the most deadly one out there, and it's the one that you don't even realize. Every time the Fed wants to print money, they are essentially reaching into your bank account and pulling that value out. And you can't control what the Fed does. And really, until money and the dollar is backed by something again, really what happened I think it was 71 or 72, America got off of the gold standard and made money fiat currency, just backed by trust. And when you do that, you can print as much of it as you like with no repercussion. And when you do that, supply and demand, it devalues everything you've got. So it's one of the biggest reasons why, unfortunately, the middle class is disappearing and really getting squeezed. And the rich will get richer because they understand inflation. They understand how to benefit from inflation. And the poor will get poorer because they don't understand inflation and don't understand that every single day, it goes by that they're losing. So I think that's a very, very important part. If you understand taxes and inflation, you're already, 70% of the way there of really achieving massive financial goals.
Yeah, and I could not agree with you more. One of the other beautiful things that happens with inflation on the positive side of things is that same inflation that we're talking about when we invest into these real estate assets actually erodes away at
Yeah.
the debt
Hmm.
that we've locked in at a fixed interest rate. So the
Yeah.
dollars that we've secured are being paid down by the cash flow from the property, and it's eroding
Yeah.
that down, all while that's appreciating generally on average around 2-3% year over year. Of course, when you choose great markets like where Justin is and other markets around the country that folks focus on, that appreciation can't gain could be even more. So the way that the erosion of that debt can be even faster. So these are just
Hmm.
really what the light bulb started connecting with me, Justin,
Yeah.
when I started learning about this stuff, and all of the things that you were taught and educated on as a youth, you had to unlearn to be able to
Yeah.
really grow your financial intelligence. But such a great point
Hmm.
there.
Yeah. I appreciate. And then I don't mean to go off track, but Victoria, I saw your little bubble light up, and I saw your camera come on. So I hope you didn't cut you off. Did you have a comment or question? I don't know if she's still there, but
Yeah,
I just want to make sure.
she is
Oh,
there.
we can come back. Yeah, we can come back to no
We'll,
problem.
we'll come back. Well, look, I'm
Yeah.
gonna jump into the Q&A session, and I have a few questions for you, Justin, just to put
Yeah.
everybody. Oh, Victoria, you're off of mute. Do you have a question?
Yes, I want to know what kind of commercial real estate exactly you invest in it. And do you invest on your own or you invest with partners?
Yeah, so we are primarily in apartment buildings. I think we'll see that diversify more this year. We've started looking at industrial opportunities just with the massive demand for what's called reshoring and pulling production away from China here back to the States and even to South America. So we're going to be looking at industrial partnerships in the future as well. We know apartment buildings are going to have a ton of distress in 2024. I think it's about $1.7 trillion of distressed debt coming due in 2024 and 2025 for apartments. So we'll continue to push on apartments, industrial, and we have an Airbnb fund that's doing very well too. Now I invest myself, and I also manage funds. So very similar to Chris, we take on investors and we invest in assets together, but I invest myself as well. Yeah.
And in what area of the country do you buy apartment buildings?
Yeah, so we're in the Midwest. I'm in Kansas City right now. We just finished our raise on a 200 unit Kansas City deal here, and then the Airbnb fund is across 10 states, and we have some properties in throughout Kansas and throughout Missouri. But because we do partnerships, we can open up that geography anywhere really. But we're going to be following a lot of distress here in 2024, which will probably take us to Phoenix, to Dallas, and to Houston quite a bit. That's where a lot of the distressed debt is next year.
Yes, so how do you know how to develop your strategy, how to put everything together? Did you have a mentor? Now I heard that you attended mastermind group, but
Yeah. Yeah, so I've done everything with mentors. I'm a huge fan of it. So I've just talked to a lot of people who are light years ahead of me in experience or in their education, and I've just talked through a lot of these things. So for me, I've always been very, very fanatical about investing and about the knowledge. And I think something I'm really grateful for is my mother was very financially literate. So we didn't have much, but we were able to stretch it a long way because she was so good at that stuff. So I've always been really obsessed with it. Then when I got into the investing space, I met other people who were doing it for longer than me, who were very, very obsessed with it as well. And we put together a lot of these plans. And it just opened my eyes to what I could be doing for a lifestyle that I want.
and these people that were more advanced than you, they didn't mind, they willing to share their knowledge with you, because usually it's like a lot of people want to talk to these people, take them for lunch, and they just don't have time.
Yeah.
Yeah.
Yeah, I think it depends. Chris and I are in a couple mastermind groups together, and so I think if you're blindly going out and asking people if you can have lunch with them, that's not really as great of a strategy. But if you're in the same groups, you're in the same networks, you're in stuff like this, and you're already kind of rubbing shoulders, you can't help but pick up on a lot of those things formally and informally. I've done deals with a lot of these people. I've invested alongside a lot of these people. So there's definitely a bit of a relationship there. Yeah.
Yeah, I would add, what you're doing to emphasize the point that Justin just made. What you're doing, being in venues like this virtually, or there are many events that are in person, around the areas that you may be in. Of course, there are conferences that take place. There's so many different places to actually meet other investors that can help you learn more about, hey, what's out there, who's investing, what type of investment opportunities exist out there. And one of the things that you hear commonly in our space, or in this world of private placements and funds and syndications, is you want to invest with people who you know, like, and trust. This is a very important thing, because you're going to see a million great deals, but if you don't have that relationship with those people, then you might want to, and you want to definitely be relying on the people that you connected with, and that you have you feel comfortable with what it is they're doing and how they're doing it, because you're typically going to be alongside of them for a couple of years.
Yeah.
But great questions, Victoria. Thank you for that. So Justin, are you ready, man? I'm gonna jump into
I'm
the
ready.
questions. All right. So here
I'm
we
ready
go.
for
I
you.
I ask everyone that comes on to the meetup these questions, because it helps me get to know them a little bit better, but it also helps all of the folks here today, and for all of those who are going to be watching the recording, get a chance to know you a little bit more as well. So the
Yeah.
first question that I like to start with when I connect with folks is my family and I, we travel a lot. We love to travel. We talked a little bit about that just before we
Yeah.
started recording, about Greece and those things. But what is one of the best trips that you've taken, and why was that one of the best trips you've taken?
Yeah, so I was very privileged. I studied abroad when I was in college. I spent 3 months in Spain, and I loved it. I got to travel to a good amount of places. Went to Italy, we went to France, went to Germany, went to Amsterdam, and spent 3 months in this beautiful country. And so during that 3 month period, I got to do what's one of my greatest life accomplishments, even to this day, which was run with the bulls in Pamplona, Spain. So that was always a big bucket list item for me. And that was just a phenomenal journey. I actually did it by myself. Nobody else in my study abroad group wanted to do it. I almost didn't go, but I said, I'll regret it the rest of my life if I don't. So I just hopped on a bus and 6 hours to wherever Pamplona is. And spent the night, not even in a hotel. I didn't have a place to stay. I ran out of money. Actually, I didn't budget it very well. So I just spent the night roaming the streets, waiting for the bull run to start. And that was it, man. That was a
Oh,
great experience for me.
that is incredible. Of course, I've watched that craziness. I call it craziness, but I'm sure that it's
Yeah.
exhilarating in the
No, it's
experience.
crazy.
Yeah, but yeah, man, it looks amazing, and definitely on the list of only, in the grand scheme of things, only so many people have done. So that's an awesome one.
Yeah.
Adding
Yeah.
that to my list. The other thing I wanted to ask you is, when we talk about, you just talked about the fact that you guys just closed, and congratulations on a 200 unit out in
Yeah.
in Kansas City, and that's
Yep.
just such an awesome things. But what else are you working on these days?
Yeah, so we had our short-term rental fund, Airbnb fund, which closed today. So that's another phenomenal opportunity that we're interested in. I'm really getting ready for 2024. Chris, I know you've been looking at the economics. I know you've been looking at the distressed debt coming due. There's going to be massive buying opportunities. And so if you wish that you were buying in 2008 and 2009 and 2007, this is the time now. There's so much distress, about $1.7 trillion of distressed debt and multifamily coming due over these next, I think it's 18 months or so right now. And this is going to be a phenomenal time to buy. So we are prepping our investors, we're prepping our due diligence, we are prepping with our partnerships, and we're ready to pounce on some phenomenal opportunities.
Awesome. Awesome. Yeah, that is it's really exciting. I mean, unfortunate for
Yeah.
those who were not wise enough to secure fixed interest rate debt, and
Mhm.
that they had the floating interest rate loans, and
Yeah.
then now those things are coming due. It is unfortunate, but if they weren't able to work things out, to Justin's point, there's a lot of things coming due, and there's going to be a lot of opportunity out there for those savvy investors who
Mhm.
are poised and ready to go. So, great point.
Yeah.
We talk a lot about, and I commonly talk a lot about financial freedom and the importance of that. In fact, you talked about freedom during your presentation, that
Yeah.
lifestyle freedom and all those things. Maybe you can tell us a little bit about, what does financial freedom mean to you?
Mhm. Yeah, it means choice. It means choice over everything. And so I'll tell you a very, very quick story, 10,000-foot view story. I think I posted about it on LinkedIn today, actually. So a few years ago, my grandmother passed away, and it was okay. She was, lived a very great life. I think she was 94 when she passed away, so had a long runway. And thankfully, it was a timeline where we knew. I got a call in the morning. They said, "Hey, can you make it here?" Took a quick flight, made it there in time. We're all in my grandma's room, and we're all, saying our goodbyes, and she's not really as coherent, but we can tell she can hear us. And I have this one cousin. I have a really big Asian family. I don't know everybody, a lot of cousins, and one of the cousins comes running in, and they say, "Oh my God, am I here in time?" And we say, "Yes, grandma's still here." And so she kneels down by my grandma, and she starts saying a few words, and they're holding hands. And after, a few minutes, 10 minutes, 20 minutes, her phone goes off. And then she goes, "Okay, guys, that's my lunch break. I'll be back." And then she leaves.
Wow.
And that was the last time that my cousin would ever see my grandmother.
Wow.
And to me, I didn't really think anything of it at the time. But as the months went on, and I just started thinking about it. When you have a relative pass away, and they just kind of pop in your head every now and then. And I just thought to myself, how horrible would I feel if I knew that my lunch break was over, I had to go back, and that would be the last time that I could see a relative. And I just thought that so many people have this restriction on their time, where they're controlled by these 30 to 60-minute lunch breaks. They're controlled by 5 to 9 a.m. They're controlled by 2 out of 7 days a week. And I just said, I can't do that. So to me, freedom means choice of me to be where I want, when I want, and buy the things that I want, the comforts that I want, without having to sacrifice my time. So that's really the ultimate gift for me.
Absolutely powerful, a powerful story, and something that should can resonate with everyone.
Mhm.
Um, the last question that I have for you is one that goes by the namesake of this show. When I remember when I was creating this show and thinking about all the names, and literally racking my brain about, well, what can I
Yeah.
do, and this, that, and the other thing. I landed on wealth mindset. We are going through this journey that you and I have gone through, in terms of increasing our financial intelligence, that abundance mindset, the learning all the things that we're learning, but not just learning it and applying it uh, as well. There, the when I landed on it, wealth mindset was just the thing that connected with me. And so
Mhm.
we, I want to know from your perspective, what does having a wealth mindset mean to you?
Yeah. Wealth is really encompassing in a lot of things. It encompasses your financial well-being, your spiritual well-being, whatever that means to you, your emotional and your physical well-being. I always like to say, everybody has 100 problems until you have a health problem, and then you really only have one problem. So can you put yourself in a position where your life is not controlled about one thing? And for most people, unfortunately, that one thing never evolves past money. They never have enough of it. They always need more. They're always chasing more. So to have that wealthy mindset is to understand, I need to put myself in a position where money is no longer my worry. Whether that means you make a lot of money, whether that means you're comfortable with a low maintenance lifestyle, so you can focus again on your life, and you can have your spiritual well-being, your healthy, and your relationships, and your emotional well-being. So wealth, again, it's somewhat similar to the other one's choice. It's being able to prioritize what's really, really important to you. And just in our society, financial abundance is a piece of that. So you can't escape it. You can't say money doesn't buy happiness. It definitely does buy you a good level of happiness. It might be short term and it might be sub to other things like relationships, but it definitely contributes. So understanding that money is a tool to get you these things that are more important than money, but money is kind of the necessity that you need.
Amazing, man. This is, I mean, it's so powerful. Just a lot of great value that you just provided throughout this presentation, and right there especially. I mean, that resonates with me so much, and for me, like the wealth. Of course, when everyone hears the word wealth, they go immediately to the money aspect of it, but it is so much more, and I love how you articulated that, because the wealth aspect of it, when you have that abundance mindset, yes, it is, yes, money is part of it, but money is just a tool. It
Yeah.
is so many other things that we have access to. Your health, your family, all the things that we get a chance to appreciate, you are just really powerful stuff, man. So thank you so
Yeah.
much for sharing that. I want to
Cool.
know, I know that we're getting close on the time here, so I want to make sure that everyone, again, here now, and everyone that will be watching the recording can reach out to you and connect with you, and follow you on social media. What are the best ways for people to connect with you?
Yeah, LinkedIn. I'm very, very, very active on LinkedIn. So check me out, Justin Moy, President's Club Investors. If you're not a LinkedIn person, you want to connect more through email or text. If you go to the website presidentsclubinvestors.com, you can definitely get in touch with me there. Download our calculator, check that out. You'll get an email from me that has my contact information at the bottom, so you can schedule calls, whatever is comfortable for you. But I love to connecting with people and hopefully to just spread the message and help however I can.
Justin, powerful stuff, man. I really appreciate you taking the time to educate us all on this topic, and I'm looking forward to continue to grow and build with you, my man.
Yeah, thank you so much
Thank you.
for having me.
Thank you, everybody. Stop the recording.